Bottom line here, cash flow, not revenue, determines if your business thrives or dies. You see, you can be profitable on paper and still be broke in real life. Okay? So, if you do not understand cash flow, your business can fail. Period. Welcome to another episode of the Say Yes to Profits podcast. I am your host, Dr. Octavia Conner. Say Yes to Profits is a virtual CFO and accounting firm that helps high-earning, service-based women CEOs just like you turn financial challenges into clarity, strategy, predictable profitability, and overflowing cash flow using our proprietary Say Yes to Profits framework. Now, typically, 97% of our clients increase profitability and increase cash flow by an average of 30% to 350% within just 12 months of partnering with us. Now, today, you all, I am going to help you understand cash flow in a few short minutes, okay? To further build on what you're going to understand today, I encourage you to download the free 7-figure cash flow confidence kit at sayyesitoprofits.com/cash flow kit. Now, this kit will help you build the forecast that we're going to build as an example today, but it will be for your business. So click the link and download that. The first thing I want to start with is understanding what is cash flow. Cash flow is the movement of money in and out of your business, all right? It is not about how much revenue you earn. It is not even about the profits that's showing on your report. It is about timing and the availability of actual cash in your bank account. Understood? Say yes, yes in the comments. Now, there are 3 types of cash flow that you must understand. You have, number 1, operating cash flow. Now, this is the money you earn and spend in your business on a daily basis. Number 2, investing cash flow. This is the money tied to growth activities, okay? And then number 3, financing cash flow. This is the money tied to loans, investors, or distributions. Here's what many CEOs do. They primarily focus on operating cash flow. But that's where the problems and the challenges occurs, okay? You see, your profit and loss statement can show that you're actually profitable. However, if you don't focus on the effects of investing cash flow and financing cash flow, you will find yourself running out of money while you're still appearing profitable and successful on paper. You see, investing activities such as purchasing equipment or financing activities such as loan repayment and distributions can quietly drain your cash reserve. So, without tracking these movements, hear me clearly, you can wake up to a negative cash balance, late payments, the inability to cover payroll, even though your revenue looks strong. Are you picking up what I'm putting down? I hope that you are, because you have to understand that cash is your business's superpower. Understood? Okay. This is why true financial leadership means monitoring all 3 areas of cash flow together. Only then will you have a clear picture of the money that's actually available to keep your business healthy, stable, and positioned for growth. Bottom line here, cash flow, not revenue, determines if your business thrives or dies. You see, you can be profitable on paper and still be broke in real life. Okay? So, if you do not understand cash flow, your business can fail. Period. So to further help you understand this, I'm going to demonstrate this on the Vive board. If you're listening to this episode, you can click the link in the description to watch it at this point. But either way, you're going to get a full picture, okay? So let's go on over to the Vive board so that I can really map this out for you. So the first thing that I want you to understand is that cash flow starts, in most cases, with your income statement. So Let's say that for a particular month, you earn revenue in the amount of $50,000. Okay. Let's say also for that month, your expenses equal $30,000. All right. So that means your net income for this particular month would be $20,000. So you're actually profitable and you're happy, but don't stop there because this is just part of operating cash flow. Let's say that you had AR outstanding, which means you sent invoices, but you have yet to receive the payments for them. So let's say your AR outstanding was $5,000. All right. So again, this whole thing is considered your operating cash flow. But as I said, we're not going to stop there. Let's say that you also had equipment, or no, we're going to say you did prepaid insurance. So you pay your insurance up for a particular period of time. Okay. So let's say your prepaid insurance was $5,000. This is your investing cash flow. Okay. So you have to factor that in. But again, we're not done. Now, let's say that you had equipment that you purchased and you have a loan that you have to pay, right? So we're going to say equipment loan. But also, let's say that you are an LLC owner and you're going to take money for yourself, right? Because you're an LLC owner and not an S Corp, your actual amount that you take for yourself as the CEO wouldn't go on your income statement, okay? It would go under your balance sheet. So let's say you put that on your balance sheet where it's supposed to go under the financing area and you pay yourself for the month, we're going to say $10,000. So the equipment loan and the owner's draw would be your financing cash flow. Are you all with me? All right. So now when you do the math of this, that means you all that your net cash is actually, or your ending cash balance, negative $10,000. So you see how this worked out? Yes, you were profitable, right? But even though you were profitable here, it resulted in a net loss of $10,000 here. Okay. And so if for that month you started with, we're going to say $30,000 as your beginning cash balance, right? Your ending cash balance is actually going to be $20,000 because you have to subtract the 10,000 from the 30 that you started with because you had more go out than what actually came in during this time. That is cash flow for you. And so I have a question for you. As a profit check yourself moment, are you analyzing all areas of cash or are you only focused on your operating cash? If you're only focused on your operating cash, you could very well find yourself in a cash flow position that can be detrimental to your business. Okay? Now, as a final thought, please understand, you all, that cash flow is the ultimate truth teller for your business. It does not lie, it does not exaggerate, it will expose whether your company is built to sustain or collapse. Okay? Now, the good news is that once you understand it and manage it properly, you unlock clarity, control, and confidence, and the power to say yes to profits every single day. You see, the way we help our clients say yes to profits is that we need them to say yes to cash flow, and then they're able to constantly have true profitability, right? We don't want our clients to just be profitable on paper. No, 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 no. We want you to say yes to cash flow by having more come in than what is going out every single day and every single way. Oh, that is true profitability. Understood? Yes, yes. Now, again, to further help you, I encourage you to download the 7-Figure Cash Flow Confidence Kit at sayyes2profits.com/cash flow kits, or click the link in the description. If this episode has been helpful in any way, please subscribe and follow our podcast, and then share this episode with your women CEO friends. This is Dr. Octavia Conner, and until next time, say yes to profits. Toodles! Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now, see you on the next episode. Say yes to profits. Toodles!